Hi, this is Matt Dimitroshin of Telemus Capital with the week in review for the week ending November 8th of 2019. Markets continued their ascent higher with the S&P 500 up 0.9%. The Nasdaq Composite appreciated 1.1%, while the Dow Jones Industrial Average lifted 1.2%. All three closed at all-time highs on the week. Cyclical sectors set the pace while Treasuries sold off. The Russell 2000 Small Cap Index continued its recent trend of lagging its larger cap peers and was up a mere 0.6%. The markets lifted on continued progress being made around Phase 1 of trade negotiations. Discussions seem to be pointing to both the U.S. and China being willing to roll back existing tariffs. On Friday, however, President Trump stated that he has yet to agree to rolling back any tariffs. Ultimately, the market's perspective that a deal is close to being done fostered a risk-on mindset, with equities lifting and a more bearish sentiment towards bonds. Within the S&P 500, the financial sectors led. Treasuries sold off, leading to higher yields, and more importantly, a steepening of the yield curve. As can be seen from the chart in the lower right-hand corner, the solid blue line is the current yield curve, where the dotted line is the yield curve from 3 months ago. One can see that the yield curve has steepened, particularly from 2 years in maturities and out. The steeper yield curve was a positive and contributed to financial stocks outperforming. Higher yielding stocks such as real estate and utilities were negatively impacted as sentiment shifted from these yield-centric names. On the week, the 2-year Treasury yield lifted 10 basis points, while the 10-year Treasury yield lifted 20 basis points to finish out at a rate of 1.93%. The dollar advanced 1.2% on the week, while crude oil lifted by $1 to close a little above $57 a barrel. That concludes the week in review for the week ending November 8th of 2019. Thank you and have a good week.